Welcome to Investors Insights. Our topic today is, did the market see its shadow? Last week was Groundhog Day, and Groundhog Phil saw his shadow. We also believe the market saw its shadow as well, with a lot of interesting and good information. We're going to go through that with you today at Investors Insights, and I am joined by my colleagues Bobby Norman, Trey Booth, and Adam Van Zant. I also want to highlight that last week we provided some incredible information in regards to GameStop with a radio interview that Trey Booth did. We also provided a healthcare benefit vlog that Jay McGowan did. We also hosted virtual meetings for our clients and hope that you will participate. We also have one coming up February 17th that will be geared towards business owners and the changing dynamics that's taking place in the economy, in business models, in markets, as well as opportunities related to the stimulus and PPP money that's out there. So please look forward to joining us on that, or if you have someone you'd like to invite, please do. With that said, I'm going to start off with Adam Van Zant. Adam, you did a great job today. As I speak, the market is hitting historic highs. And so give us an update on the technical indicators.
Absolutely. I appreciate it, Greg. So let's break down the technicals. The S&P close on Friday came in at 3,886. So now we've got a new resistance level of 3,950. New support level of 3,800. So we are starting to see, at least in the short term and intermediate term, a more bullish tone in the markets. We also look at, the long term, and that gives us a good indication of a bull bear indicator. Also, we want to look at the fundamentals. So one thing that we talked about last week, in part of our conversation along with this week, is the price to earnings ratio for 2020. We saw this hit record highs, and the reason this is important is, at least from a fundamental standpoint, we start to see that the market's indicating a more overvalued theme. That's why it's important for us to look at both technicals and fundamentals from that standpoint, is to compare the two and see how they complement each other.
And you're bringing up some excellent points there, Adam, and I appreciate that, which ties into, Bobby, what you were saying also earlier this morning in terms of earnings and what we're seeing there. People are going, can the market go higher? What's driving the market? That's one of the questions we're getting on a regular basis. Talk some about earnings and what we're seeing out there.
Yeah, after a rough end in January, the market showed a lot of strength last week to start what has historically been a volatile February. And one of the main drivers of the market strength is that the S&P 500 earnings continue to surprise to the upside. So as you can see in this chart, more than 80% of companies beat estimates for the third consecutive quarter. Furthermore, the surprise ratio is greater than 17%. So the average earnings beat is 17% higher than expected. And so now it's important to note that analysts have been really kind of slow to adjust estimates higher, considering the economy is still struggling. And we have another week of earnings reports to analyze, but so far so good with earnings season.
So Bobby, I appreciate you tying that in with what Adam had to say. A lot of times the market will move ahead of the economy in anticipation of things to come, one of which is the vaccine. There's a lot of speculation out there that as people get vaccinated, that they will get back to being out and about, that they will spend their money in the ways they used to, maybe on travel, going to the restaurants. In addition to that, continuing to invest in their home improvements. There's a wide range, as well as the fact that innovation and technology that came out of 2020, people are investing in it and participating in that. Online shopping, for example, continues to increase. A lot of things like that, but the market is anticipating that the vaccine is going to make a difference later this year. That said, Trey, you made some excellent points that the market may have seen its shadow here in the United States, and that earnings and projections look like they're going to continue moving forward. However, as you said, it's a big world. Talk about the rest of the world and what's taking place with COVID and the impact on their economy.
Yeah, thanks, Greg. So, I think all of us really kind of shrunk our network and grew, and the amount of people we're seeing and talking to really kind of became more local during this pandemic. But it's easy to forget that the markets are interconnected globally. So what happens overseas can have a huge impact on portfolios in markets here in the U.S. So if you look at this chart, the U.S., while we did have a major drawdown, is the second best performing economy in terms of GDP growth or lack thereof globally. China led the way with the only major economy growing. But if you look at the rest of the developed world, look at France, Italy, the U.K., their economies shrunk at 9+%. And I'm gonna focus on Italy right now because they're having a lot of unrest. Their government has completely collapsed. There's a lot of uncertainty and a lot of anger, and some of that's coming from youth unemployment. In Italy, the age between 15 and 24, more than 1/3, that's 1 in every 3 Italian age 15 to 24 is unemployed. That creates a lot of angst and frustration. So as we reopen, we're going to see a lot of things were put on pause. There's some uncertainty in the world. We talked a lot for years about Brexit. That's the British economy leaving the European Union, and will that be the beginning of a trend where more countries look to leave? A lot of this COVID has kind of made people kind of focus on internals, but I think that as we reopen, we're going to see that uncertainty and that distrust and unhappiness overseas may bleed into some economic troubles and may bleed into some market hurdles going into 2021, because we may be leaving 2020, but the problems that were created in that year will be hitting us for a long time.
And that's why we're focused on the U.S. markets as well as the global markets. There's a rippling effect there, and you did a great job explaining that. And so we're going to continue looking at all these factors. We're going to look at how far the market sees its shadow. Can we continue to move forward? How do we need to navigate? We're going to continue to do the vlogs, the podcast, the social media. We're going to continue sending out our research and reports to those of you that are our clients, and we're going to manage the portfolios to each and every client's financial blueprint. We hope you have a great week. Continue to follow us, continue to forward this information to friends, family, and colleagues. That means a lot to us, and we'll keep you updated as we continue through the month of February. Have a great week.